on Expedia, there's really three parts to the thesis. Two relate to recent M&A action, and the third is basically around their organic business. And we think the first two parts of the thesis are what's really driving this story. The first one being the Orbitz acquisition, which was largely reflected within whether or not Expedia can hit its EBITDA target. The second being the HomeAway model transition, which is a very, very big opportunity that seems to be fairly underappreciated by the street. And the third one is just the trajectory of organic room nights, or just room nights in general. So on the first part, when it comes to the EBITDA target, this is actually a lot easier than a lot of people are giving Expedia credit for, simply because it's largely a cost story. And what we mean by that is that Expedia had been guiding to roughly 35 to 45% EBITDA growth. But when we think about the actual acquisitions they made last year and the purchase accounting headwinds that essentially negated the EBITDA contribution from both Orbitz and HomeAway, the actual organic target is a lot closer to the mid 20% range. And as far as Expedia and Orbitz are concerned, there's really two big components to that. The first one on Orbitz is that it's really just a cost synergy story, the first part, as evidenced by the last print, given how badly Expedia missed on the organic room nights number, or just room nights in general, but still blew out their EBITDA target and consensus EBITDA estimates. It just comes to show us that this really is a cost story. And on that note, there's really two big drivers behind that, or three actually. The first one just being just synergetic cost cuts, removing duplicate costs, but there's also two big levers that it can pull. The first one being Orbit's marketing spend, which is considerable, but is largely a redundant cost right now, because in the eyes of the consumer, Orbit's properties and Expedia's properties are essentially two different things. So advertising for Orbit's properties could essentially take volume away from Expedia's properties. So it's almost a redundant cost because they're all under the same house right now. The second one being that Expedia can pretty much non-GAAP anything out of their model right now. All you have to do is go into the definition of how they classify expenses as restructuring, or just how they non-GAAP expenses out, particularly on the restructuring side. All they really have to do is identify a cost that they're no longer planning to carry forward, and they can non-GAAP it out of their estimates. So it's actually pretty easy. Yeah, I know, but it's the game we're playing.
Yeah, right. Yeah,
you know what I mean? But I mean, that's the thing, is that the street is going to look at this from a non-GAAP perspective, and with that, Expedia really holds all the cards, right? Sure. Aside from what they can do organically, even on the GAAP side, they do have that big non-GAAP lever and just shifting stuff under the carpet in the restructuring expense.
Wow.
No, I think the much bigger part of the story right now is on HomeAway and the HomeAway acquisition, because that's actually a very considerable opportunity, simply because that model was under-monetized relative to its potential. And what we mean by that is, by HomeAway's and Expedia's estimates, roughly their collective properties are generating roughly $15 billion in bookings. Now, if you
How does HomeAway make money? I don't even know.
So the way that they have historically made money is by selling listing subscriptions.
Okay.
And that was a tool that was fairly wasn't really a tool to actually realize the potential for what HomeAway was actually providing for its customers. And I'm glad that you brought that up, because the model transition is about moving away, or moving closer to a transactional model to take advantage of the bookings that occur on that platform, or occur as a result of that platform, versus the listings model, which was relatively under-monetized.
And who pays for the list? Like who pays the subscription? Someone who's listing a house?
Yeah, exactly. So it would be property owners, vacation rentals that are just looking to generate extra income. Mm-hmm. Now the thing is that for the most part, the bulk of those transactions were occurring offline. And this model transition is about moving those transactions online, so Expedia or HomeAway can charge a commission rate on it.
Yeah.
And it's a far more lucrative far more lucrative opportunity. Now, the pushback is whether Expedia is going to be able to pull this off, because there has been a ton of pushback from property owners that are up in arms about the model transition.
Yeah.
Now, the reason why we're actually bullish on the transition is because these owners essentially have to pay to play. They're generating too much income off the platform to really push back. We're talking about, annual rental income somewhere between 10 to 20,000 per unit, depending on how you slice up the data.
So they're going to pay it. They're not happy, but they're going to pay it.
They're not happy, but they're going to pay it. And while HomeAway tried to, as a standalone entity, try to move into a transactional model, they didn't push it nearly as hard as Expedia has, where Expedia is actually now penalizing the listing subs if they don't move online. This is what they call their best match policy. It's a sorting algorithm, and what they do is they're essentially prioritizing the listings that have the highest probability of being booked online to the top of your top of the search order. So that's what you're going to see first when you go on any of HomeAway's sites. It's because of that move where essentially those that do not comply essentially get pushed all the way to the bottom. Now the thing is that we're actually already seeing progress with this transition, even though it technically doesn't go into full effect, or it didn't go into full effect until July. But what happened with this best match policy that I was talking about? But what happened was that HomeAway, Expedia had implemented this best match policy within specific tiers of those listing categories. So they had a bronze package, they had a silver package, they had a gold package. What they did was they implemented the best match policy within each one of those tiers. But the thing is that the overwhelming majority of HomeAway's listing subs are within 1 to 2 tiers. Best match has actually been in effect for quite a while right now. And if you go and you read the reviews where people are complaining, they've been complaining about this best match policy well before Expedia had implemented it officially or in full effect starting in July of this year. As early as January this year, because these business owners were getting hit. So what we've seen in the most recent quarter, and this is after basically only 2 full quarters after owning HomeAway, is they've essentially tripled their revenue growth rate.